Hi and welcome to Next Generation Finance, a new podcast from SCBA where we explore the world of sustainable finance and the latest developments in this market. My name is Lina Apsheva. I work with sustainable finance here at the bank, and today I am joined by the head of climate and sustainable finance at SCBA, Christopher Flensborg, who will tell us about the inception of the green bond market and share his personal insights. Hi, Christopher.
Hi, Lina, and thank you for the invitation.
Thank you for being here. Well, first of all, I'm extremely excited that we're finally recording the first episode of this podcast. Next Generation Finance will join the family of SCB podcasts as the first podcast in English, so that is very exciting. And this podcast was originally your idea, Christopher, and you're no stranger to coming up with brilliant ideas. I just wanted to point that out. As some of our listeners might know, in 2007, you took the idea of green bonds to the World Bank, and in 2008, the World Bank, together with SCB as the sole advisor, issued the first green bond. Now, more than 10 years later, can we say that green bonds have become a mainstream product?
Absolutely. I think it's difficult to find a professional bond investor or a professional bond advisor who doesn't know about green bonds and doesn't try to learn more about green bonds to be capable of advising and speaking about that to their stakeholders. So yes, you can absolutely say that's mainstream.
But for those of our listeners, Christopher, who may not be so familiar with green bonds, could you tell us just in a few words about this product that pretty much kickstarted the whole sustainable finance market?
Yeah, I can tell it in two parts. So we have a lot of listeners into this podcast, and some of them are inside our world and others are outside this world. And first of all, a bond is like a loan, right? So you when you do big loans, you might do it in the public market as a bond. And imagine that a green loan or green bond is just a normal bond or a normal loan with a filter where you actually say that the money is going to go for green projects. We all understand that if you go into the money and put money into the bank and you can decide that you only want to support projects that's going to create clean air and clean water for the next generation, then it's of course better than if you don't do that. Now, to do that, you need to create systems and filters and competence inside the financial world. That's what green bond is about. And the first green bond for institutional investors back then, the one we brought with the World Bank, that opened that door. And since then, that market has been growing and growing. And today, everybody is talking about these filters, which is a fantastic achievement.
Yes, exactly. And the market has also grown in terms of products as well, right? Now, green bonds have siblings in the form of social and sustainable bonds, and also what I would call a cousin, sustainability-linked bonds. And this year, we see extreme growth in this market specifically with sustainability-linked bonds just in Q1 of 2021 have already surpassing the whole entire amount for 2020. So could you tell us a little bit about these products?
We're working from a lot of different perspectives. One of the areas we work around that is on financing current investments, and another one is how to support industries and actions that's going to bring us to a brighter, cleaner, leaner future. And when you're talking about the green bonds or the social bonds, we call them user proceeds bonds. So that's basically a way of determining that you now invest in projects which have been financing or which have been created in a way which is lean already now. However, that is not going to bring us to Paris, or it's not going to bring us to a leaner future. So you, alongside supporting the current projects, you also want to support the companies and the activities which are actually going to bring us to a much leaner and cleaner future. And for doing that, you need to understand strategies, you need to understand benchmarks, you need to understand challenges, and you need to team up with people that's actually willing to address those challenges with their strategies and move the world towards a better future. And for doing that, we are basically creating new instruments which are enabling industries, corporates, banks to communicate about their strategies and put some KPIs, key performance indicators, so some targets up on how they're basically moving towards a leaner future. And these products we call sustainable linked. And now, with the whole challenge which we have around understanding the challenges, these instruments are basically a way of sharing best practice. So when a company is coming out, we had Daimler coming out with a sustainable or with a green financing framework. We had H&M, Henderson Morris, coming out with a sustainable linked bond framework. When they're coming out, they're basically sharing the challenges inside their sector, and they're also sharing the solutions they're coming up with to address those challenges. As an example, Hennes & Mauritz is coming up with recycling 30% of their raw materials in just 5 years, which is a very, very significant kind of ambition, which will change the way of clothes. And Daimler is moving faster than the German transition, with actually coming up with a lot of new cars which are going on fossil-free solutions. So it's exciting.
Christopher, would you like to tell our listeners a little bit about what we here at SCBAs specifically are doing in terms of these products?
What we're seeing right now, that is a fairly long process of identifying. Actually, we're rebuilding what we destroyed back in the day. So when you used to do finance, you did it locally, and you would do it at a local financier, and everybody would know each other, and you would not kind of abuse the mandate going back and forward. And suddenly the market grew global, and we're lending money out and investing money, which is basically going across the world, and it was fairly intransparent. And suddenly you are realizing that the money you have been engaging in investments or in lending are used somewhere in a corner of the world and might not do what you want them to do. They might actually, rather than building societies, undermine societies, and that's not okay. And with with transparency, we've been made aware of this. So with social media and so on, we've been made aware of this. And what is happening now, that is that investors and banks are basically on the one side making sure that we don't support that, but also helping our clients to get a better mapping and understanding of how they can actually track the impact of their investments and their lendings. So we're about to create a massive amount of procedures and due diligence protocols which reduce the risk of money doing wrong, and thereby we help our clients. We help our clients to reduce their risk, because at the end of the day, nobody benefit from undermining societies, and you're going to be held accountable. And if we can create better systems, or if we can create better advisory for our clients to detect those challenges and mistakes at an early stage, we can help our clients to reduce the risk and thereby become a better company, and also at the same time, as a bank, reduce the risk we have, because at the end of the day, if our clients fail, we fail.
And I would also definitely love to get your insights about how you expect the market to develop further. But before we talk about the future, I wanted to have a look into the past. Right? You have worked in finance for, is it 33 years now?
Yeah, it's 33 years. Started back in 88.
And out of those 33, I've heard you say that it was 17 years that you worked on the trading floor. And actually, just this morning, you referred to the trading floor as your kindergarten. So how does a full-blooded banker like you, who grew up in this environment where everything is about the profit, how does someone like that all of a sudden become a pioneer in the sustainability, in merging sustainability together with finance, and plays a major role in kickstarting the sustainable finance market?
I think that before I go into the explanation, which I'm happy to do, I want to highlight that, yeah, I have probably been playing a major role, but there's many people that have been playing a major role. So it's a lot of individuals which have moved this and are still moving this forward. Going into to where I personally got activated, it was a combination of different things, as it often is. On the personal side, which I think is important to mention, because it has given me the strength to continue in when I've been meeting obstacles, and I met quite a few obstacles. I had a period of a couple of months in a hospital back in 1996, where I was quite grateful for coming out, being the one I am, and where I promised that if I ever could do anything inside finance, which I believe in, for the environment, I would do so. Alongside that, we then had a situation back in 2006 where the world was growing very rapidly because of low rates, and governments got a lot of taxes coming in, meaning that they didn't need to borrow a lot of money. And in that situation, we had a lack of what we call zero risk or low risk products, which is a natural kind of investment for pension funds and insurance companies. And I was asked by the bank to try to find a replacement for that. And the natural replacement for that would be what we call SSA, so super and sovereign and agency issuers, so governments and sub-government issuers, which is basically capable of taking in taxes and thereby repay their debt. But since they were not issuing the governments, we needed to find other alternatives. And what was challenging back then was that the market was full of structured products. So we had a lot of alternatives which were not zero risk or low risk, but which was basically other products out there. And consequently, a lot of investors didn't really want to invest in the kind of the supranationals, the kind of World Bank or EIB or IFC or African Development Bank at that time. And at the same time, there was interest from our institutional investors to engage in, at that time, global warming. They wanted to find out ways to invest in there. And because of these three things, so first my personal interest, and second the challenge of replacing, and the third the interest for global warming, I came up with an idea of actually replacing zero risk with an overlay which was engagement involving in global warming. And I brought that idea, the raw idea, to some investors, and the investors loved the idea. And with that in hand, I went to the World Bank and asked them whether they would be interested to work on a project like that. And the World Bank came back quite fast and said that yes, they would like to. And I think it was primarily because of the investors, not because of course also because of the global warming, but also because it had already been blessed by the investors.
Wow, that's quite an inspiring story, I would say. But nowadays, when, as we've already mentioned, sustainable finance is becoming quite mainstream, how would you say professionals working in finance, but maybe not directly with sustainability, how can they incorporate this kind of thinking into their work and their operation?
I think that it was quite interesting. If we go back to history once more, I mean, when we had the first meetings, we had 5 investors in the first transaction, and we had a couple of meetings, sessions where we were hoping to get 10 or 20 investors in, and there were becoming 2 or 3 or 5 investors in the first meetings. And the reason for that was that the investors didn't really understand how this was fitting into their mandate. Now, the first transaction was after Lehman, right? So the whole environment had changed, and I think that the advice to all these people around in finance and other areas as well is to you can almost call it empathy, but try to understand how to adapt a vision or a product into the needs of your stakeholders. So the investors needed to invest in zero risk, and now they had an opportunity to invest in zero risk at the same time as to addressing something that was important to address at a reasonable or a fair yield. And the advice to other people in finance and other parts of the society is that this is also possible for you. You will meet a lot of obstacles, which is actually fun afterwards. You're often saying it's not the goal, there's the goal, it's the travel to the goal, there's the goal. That's where you have the experiences and all the takeaways and all the challenges that you have actually been meeting and beating. They're making you to grow, and they're good experiences. I mean, it's good stories. We can look back and we can laugh. Of course, you're not laughing when you're standing in them, but this is what you want to do. You want to change the world by actually improving systems bit by bit and giving your contribution. And that would be my advice to them. So first of all, find out if you have an ambition like this, how it fit into your stakeholders' universe, and then understand the challenges that need to be addressed, and then be persistent. Don't give up. Continue to nag.
I think a lot of people listening to this will be quite inspired to, expand their thinking about finance in general or any other industry that they may be coming from. But when we talk about sustainable finance specifically, do you think this product family in this market has the potential to expand even more, or do you think it's already kind of grown into its own clothes and now we have to look at new solutions?
No, I do think that I think this is the future of finance. You're calling this podcast Next Generation. I'm actually curious to why you do that.
So it's quite an interesting story of how it came about, actually. It was one of the discussions that we were having in the team, and someone just said, when talking about sustainable finances, we get very excited, and someone said, this is Next Generation, and I said, aha, that is the name that we're going to use. And I think that there is a really good reason for that. So sustainable development, as we know, it means meeting the needs of the current generation without compromising the ability of future generations to meet their own needs. And here at the bank, we like to merge that idea with finance and say that sustainable finance means meeting the financial needs of the current generation without compromising the ability of future generations to meet their needs. And I think that's pretty much explains the name for this podcast. Sustainable finance is not only finance for future generations, but it is the future generation finance. So that's the story about the name.
And that is actually coming back into the next generation of finance. So basically, there's a couple of we call mega trends in finance, which are going in parallel right now. So we all know about social media and big media, and we know that everything is being explored in one way or the other. Everything is being disclosed in one way or the other. And that means that you have been held accountable for everything you're doing, which is a good thing. And due to that, there's a lot of pressure on all parts of society, of course also finance, in respect to what you support and what you don't support. Alongside that, you have the financial crisis, where some of our colleagues around in the world abused their mandate and basically took far too big risk, which were creating instability or social instability across the world, which is not a good thing. So there's a demand on finance and actually taking ownership and provide contribution to society. So you have transparency on one side, and you have purpose of finance on the second part, and second task. And then on the third thing, which is not less important, we as bankers, we as investors, we are also people. We also want to create a better world, right? So you suddenly have an instrument which is allowing you to show contribution, be transparent, and show what you're doing. At the same time, as you're actually empowering the people that's working for you or working with your money to go out and find ways which are both securing finance, because that's our mandate, at the same time as they're helping to create a better world. And who don't want to do that?
Absolutely. So all of that being said, what are your expectations for the market?
Oh, sorry, I forgot that. I forgot that, didn't I? I think that this will be. This kind of attitude will be embedded in all financial discussions going forward. It might not happen next year. We need to find the frames. We need to find the relevance. We need to define the language. But I would say for sure within 10 years, and maybe even within 5 years, I would expect that this would be a natural part of any investment. Do you want to build a new house? Is it going to be a efficient house, or is it going to be an inefficient house? Are you going to buy a new car? Is it going to be an efficient car? Or is it going to be an inefficient car? If it is inefficient, you might not be capable of selling it again, and that means that it might be harder to get financing for it. So then you need to invest your own money in that case. So I think all these kind of things are it's not things that's going to happen tomorrow, but it's things that's going to evolve over the next 5 to 10 years.
Sounds great, and I'm definitely looking forward to keep our listeners updated on these new developments going forward. Christopher, thank you so much for coming today and joining me and marking this milestone first episode of our podcast with this great discussion. I'm really looking forward to what more we get up to in the future.
Thank you very much, Lina. Thank you for the invitation. I want to say I'm looking very much forward to the future podcast. I think that one of the experiences I've gained from the kickstart of green bonds and sustainable financial markets is that there's so many stories out there. Investors are driving this, but everybody wants to contribute, and I'm sure we're going to hear that in the future podcast. So thanks a lot for inviting me.
Yeah, thank you.